OKX CEO Star Zhu says 50% of global economy will run on blockchain. When we're talking about global economy, we're talking about trillions of dollars from the United States all the way over to the Far East in China, all the way down south to Chile and over to South Africa. We're talking about a global economy. So let's get to the meat of this story here. So in Abu Dhabi Finance Week last week, the CEO says 50% of global economic activities will operate on the blockchain. So that's the future of the financial system, right? The whole transference of the system. So he says he framed the shift as demand from a generation raised on digital services, mobility, and artificial intelligence. Zhu described blockchains as programmable financial rails that move value freely, instantly, and globally 24/7. Facts. I am very comfortable shopping on Amazon and spending thousands of dollars. I'm very comfortable ordering food, ordering clothes, buying basically anything and everything on the internet. And as a person who's been in crypto for many years, I would move thousands of dollars, hundreds of dollars, tens of dollars in a second. And I barely would think twice at this point. I used to be really uncomfortable, but now I'm like, hey, let's get it in. He positioned the trend as infrastructure, not a trading call, pointing to stablecoin settlement, growth, multi-trillion on-chain asset values, and expanding wallet counts. He also noted ongoing regulatory work in major markets that is building channels for compliant activity. So again, y'all, we got the Genius Act in the United States. They are working on the Clarity Act as well. And that is going to clarify what's a security, what's not a security, defining the blockchain. And I showed y'all a few weeks ago that even on the Congress website, they have specific definitions related to blockchain technology and cryptocurrency in general. So I think that right there makes sense to me. In this next story, this is about Cathie Woods. If you know anything about Cathie Woods, she is the CEO, founder, and head investor for ARK Innovation Fund. And she was big on the Tesla during COVID, a little pre-COVID, and she was correct. She had a couple tough years recently, but with a 5-year outlook on investing in these funds, she's been doing pretty well. So she says, the next gold crash, she sees Bitcoin outperforming. And we all know gold has been pumping. Silver also went on a nice pump, even palladium. So precious metals has been a focus for governments, especially dealing with AI. You know, we're dealing with vehicles, electric vehicles, solar. So you need the lithium, you need silver to be inside of these technologies. And obviously with the United States debt hitting 38 trillion, gold has become more attractive. China and Russia buying up a lot of gold as they slowly move away from the dollar. They are pumping their reserves, okay? And Tether, we know, is the number one holder of gold outside of governments. Let that sink in. So this is what she says here. Cathie Wood discusses Bitcoin, gold, housing, inflation, and Fed's December rate. Check out for that on Wednesday. There's a high probability that the Fed will cut rates by 0.25 basis points, which should pump the market, or at least bare minimum cause volatility, okay? So she argues when the economy grows because of technology, which is blockchain, AI, robotics, automation, etc., businesses can produce more with fewer costs. That pushes prices down, meaning inflation falls, not rises. So if inflation is falling, people are a little less thinking about gold and they're more willing to add more risk to the table. And that's where you get small caps that are in the Russell 2000 being able to get cheaper loans. Companies that don't have much revenue get cheaper loans so they can grow their businesses. big dogs like Tesla and Nvidia can also get cheaper loans so they can continue the growth process. So I definitely agree with Cathie Woods here. The US finally feels like it's back on offense. Innovation is happening and is encouraged. It's hard not to be an optimist right now. We're in a golden age for freedom, he says. Check out this post.
I'm an optimist, right? I think that it's kind of a golden age for freedom that's happening with, democratization of access to these different products with crypto. We're seeing prediction markets really start to flourish. We have regulatory clarity now for stablecoins. We're seeing it emerging, hopefully, for market structure. And the U.S. feels like it's back on offense. We have a chance to go update the financial system with crypto and just get a lot of the friction out of the economy. Going into the midterms, who knows? Maybe the government will want to juice the markets, do some more rate cuts. So I'm generally optimistic, and we try not to get caught up in any short-term trends. We just try to build good products and play for the long term.
Brian Armstrong, a CEO, founder of Coinbase, definitely knows what he's talking about, and I agree. To be an optimist in this type of market, even though the United States has a lot of debt, but we also have a lot of innovation. And people like him, Larry Fink, are now pushing all of this technology to the next phase. And it looks like the United States is positioning itself to be number one in crypto, number one in blockchain, and stay at the forefront of innovation. Coinbase now lets Americans take loans using Ethereum as collateral. Ethereum isn't a tech play anymore. It's becoming a collateral asset, and collateral assets win every cycle. Bitcoin, Ethereum, you can borrow against them on Coinbase. And this is a partnership with Morpho Labs as one of the backends, and also Moonwell as one of the backends. This is kind of crazy. So if you got a lot of bags, this is a way to not sell your bags and let them pump for the future. Makes sense to me. And JP Morgan CEO Jamie Dimon says stablecoins should work better for international payments. Again, you got the Bitcoin, you got Ethereum as treasury assets, you got them as the foundation for crypto. So I always say, put that one in your bag, keep that one in your pocket. People are also trading them with ETFs, probably be in your 401k if it ain't already in there. Then you have USDC and Tether as the payment infrastructure stablecoins. And I definitely have used stablecoins when I left my, wallet and stuff like that. I got a card that's actually plugged into Apple Pay. So I can use the credit card, use the stablecoins. We do know that the USDCs and Tethers settle much faster. And if you're outside of the US, especially in a place like Argentina, you in somewhere in South America, maybe somewhere in Africa, you can use the US dollar on blockchain rails, and that benefits you because the dollar is much stronger, and the dollar is used in 49% of all transactions in the world. Got to let that one sink in too. And the final thing I have, a piece of news I have for y'all, is from Ryan King Solomon. This is very interesting post, so we're going to work our way through it. He says, breaking, an entire nation has just chose Hedera. Georgia, this is the country Georgia, has announced its public sector DLT rollout, including land registry, national records, smart contracts, and real estate tokenization. We're going to dive in more into this later when I talk about Hedera. This is the first real national deployment of public ledger infrastructure. Georgia manages more than 3.5 million property records in a $16 to $20 billion real estate market. That is big though. Even 1% tokenized would put $160 to $200 million of value on Hedera. Global real estate tokenization is projected to reach $5.7 trillion by 2030. And it isn't only Hedera making moves today, and here's the rest of the moves. Ripple received expanded approval from the Monetary Authority of Singapore for fully licensed digital asset payments. We know about that one, covered that one. That's huge. Because if you can get approved in Singapore, you're real close to getting approved to the United States. Chainlink released its Everything report outlining $867 trillion on-chain economy, and Grayscale launched the first Chainlink ETF. I like that. Bank of America is telling wealth clients that a 1 to 4% crypto allocation is now appropriate. Vanguard reversed course and will allow more than 50 million brokerage clients to trade crypto ETFs. XDC continues to pushing real world trade finance adoption with input from former Swift leadership. And Quant is moving deeper into multi-ledger infrastructure with new Fusion updates. Hedera is gaining momentum in sustainability, AI, and public sector tokenization. We just saw that about the country Georgia. DAG or Constellation is rolling out real-world ledger tools for data integrity and digital evidence. Great post by Solomon. That is a lot of adoption by the mainstream or the real world. Let me know what y'all think about all this breaking news. It's a lot to keep up with. I got you covered.
Passive income, gold in my dental, thank God for my mental. Investor fundamentals, told my girl it was simple.